The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi folks, Basil Chapman, Tiger Technicians Hour. My pleasure to be here on this 28th of January. Wow, January's almost finished. And great shows. Today's Thursday. We go all the way from 7 o'clock in the morning. And Nico and Paige are talking about fruit, trying to limit yourself to having, they talked about a handful of whatever it is. Wow, that's hard. I'm a fruitarian. I love fruit. But, you know, it's wise because the sugar content is very high, but there's also some very good ingredients there. Okay, folks, we're going all the way today from 7 o'clock until 6 o'clock with Andy Hecht. And let's get going. Dow's up 35. This is very interesting. Dow was, I'll tell you right now. Yeah, let's go to this chart. And this chart that we're looking at here, incidentally, I did have a Chapman wave trend gauge flashing 2 days ago, which suggested that the market should have a rug pull, which we did, and then a rally, which we did, and then another rug pull. That was yesterday. Today, I'm having a signal saying that there should be a rally in the futures between 9 and 11 points, sometimes overnight, but there should be a sharp rally within 2 days. I don't know if this is the rally because we came off the bottom very sharply. But in the meantime, this is what we're looking at here. You see this chart of the Dow? See that sharp pullback into the August 24th low? And then there was a lousy day following, and then whoosh, all the way from the 15,370 level to the 16,669 August 28th high. And then it meandered, and then it pulled back, and it started to test the 15,600, we get a little lower, but we'll call it 15,600 level. For a long time, it even went to 16,933. That's almost 300 points above that previous high of August the 28th. Then it comes back on the 29th of September at 15,942, turns around, starts a huge move to the upside. Look what we've done. We've come down sharply to the 15,450 level. So far, the sacred 15,370 level hasn't been broken, number one. Had a very sharp move in just relationship to where we were. It's just a nothing compared to the 17,977 high of November, early November, or even the, I think that was December the 29th. Yeah, December 29th high of 17,750. We're talking about the Dow, of course. Come down very sharply. And then what happens? It stalls. Instead of this 4-candle smash to the downside of 2,000 and about 2,300 points, here we're going to move in this move from the 17,750 level to the 15,440 of 2,300. But look how long it took. So when you use up time like that, it means that you've got a bounce coming, and now you're going to find out whether the residual strength is extant or the residual weakness is going to remain in place. So the choppiness that we've had you see these candles, green, well, it isn't green, it's white, but a white candle, a black candle, a white candle, a black candle, and now we're going to see if today you can produce some kind of a white candle by closing above yesterday's close, and I suspect we will. What's really interesting about this is the MACD is starting to improve, the histogram is improving, the stochastic is improving. So I'm not concerned yet with the choppiness. Yes, we've got stopped out of one part of our big long position in the Dow, but we keep getting back in with trying to garner some profits there to be building up some kind of a kitty. I still suspect that we're going to creep to the upside. It looks harder now to get to the 17,500, 17,600 level, but I think we will make a C, and that's where we're going to test the inner strength or the residual weakness. So that's number one. Number two is when I run through all these different indices, see the E-minis, the 120-minute chart was looking great as if it was wanting to make a leg C, but a leg C that went above in one move to give what I call the Chapman wave overlapping wave to go above 1910. Well, it went all the way to 1902.5 today. And then there was a sudden, these washes of selling with the market not breaking down can become a positive. I don't want to dismiss it as nothing. I am going to say that it will become a very big negative if the Dow were to close under 18, if the S&P futures closed under 1800 at any point. But so far, that 9-period exponential moving average, that black line there in the daily, that's become a magnet, and it should become a support level quite soon. This is my thinking, okay? So now let me run the numbers. So we got the Dow INDU up now 46 at 15,000. Oh, I didn't finish my sentence. I said it was on the upside, went all the way to the 100, and I wasn't sure exactly what it went, all the way to 16,087 to the 9-period exponential moving average, which is at 16,068. And then it got repelled, and the downside smash was really quite sharp because intraday, I'm talking about if you're looking at the 10, or look at this, if you're looking at the 10-minute chart, look at that. You went to an alternate count, which in the end turned out to be a peak F, and you plummeted from a high of 1902.50 down to a low of 1865. I would say that that is a 35, 37 point decline, and that's big. So the whippiness is part of what happens when you're coming off a base, and a base that is formed under severe conditions to the downside. Now, I just want to show you something else. Look at the beautiful symmetry of this inverted triangle. This is a 1-minute chart. And you've just done this. You've gone, there's your sine wave. You know, the markets are always working in sine waves, arches and cups, or a straight line move. This has to be considered here a straight line move. And now what we've done is we've gone to a peak F in the 1-minute chart, right at that resistance on the left side, and we've formed yet another V. It came in just a little bit earlier than the left side, right side price time match in the Chapman wave. But this is very interesting because it's formed a fulcrum level between 1883 and 1887 in the futures. Okay, now what we want to do is to go back to the S&P, and the S&P at this particular point is up 7 at 1890, and it's made a peak B, a leg B. It looks like today might be a peak B. We don't know if it doesn't take out yesterday's high. But you've got the MACD just now crossing positive, and the stochastics at 41%. So far, the ingredients are good, but the price is not. The price under these conditions should now be at least close to the high of yesterday of 1916. I would say right at this point, 1906 is really where it should be. So there's a lot of makeup to be done here. The day is very early, and I suspect that the bias now will be more towards the upper side of the spectrum. But look at the 200-period moving average in the weekly chart at 1813. Hit almost exactly, what was the low? 1812? Yeah, it hit it exactly, 1812.29. Look at that nice bounce off the top. Now, I do not like wicks like this. Whatever the candle, looks like a dragonfly candle, but whatever the candle, I don't like it, because if you start to come back and the S&P starts to break 1850, that's a problem. So let me finish with the numbers here. The gold is up 40 cents at 11.16. Silver is down 20 cents. Crude oil is up to 33.20. Bonds are and the dollar is down 38 cents.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Basil takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, folks. We're back. I had some really good questions, a couple of questions that I'd like to answer in the emails and IMs, etc. But first, we're going to go to Bob in Greeley, Colorado. Hi, Bobby. How are you?
Good, Basil. I have a question for you on the FINRA rule on professional trading accounts for a trust they just started it January 26th on Tuesday, that they have a 15-minute delay, up to a 15-minute delay on the quotes of ask and bids. Do you know anything about that?
I know nothing about that. So this
considered a professional account. I'm the recipient. My daughter's the trustee, and they say they have a 15-minute delay, which it actually is.
So in other words,
and look at the TV and look at the Bloomberg at the indexes, and then look at my trading account, and it's completely off whack.
So
I just changed it today?
But can I just ask you a question? Is that just for the data that's coming to you? Because you could have another account up, another platform up, and that platform will give you real time. Is that correct?
No, they're giving me a delayed quotes on everything on the Scott Elite. That's the top Elite Scott trade account.
But they are giving
this morning. But
they are giving it to you. But you could use a different account to get real time quotes, right?
You know what? I can't because I closed the account this morning about 2 hours ago.
Okay. So I think what you're saying is that for the data that you receive, because of the way it's been set up in the company's account, not yours, but the company itself, they are giving delayed data. So I'm told that all advisors.
201A.
Yeah. So
I looked it up on Google.
I'm told that all advisors by rule are delayed by 15 minutes. That's the thinking. But that's got nothing to do with whether or not you can get your real data somewhere else. In other words, if you had, I think it is, I'm trying to think, Warden, I think, has real-time quotes as a free service. And I know that John Logan, in his system that he has, he's getting real-time quotes, but in some cases, They are just the lines, straight lines to tell you they're not prices, they are lines. But I'm getting real-time quotes through my trade station. And so I understand what you're saying. And do you, because freestocks.com can give you the live so that you can have a system up that's a platform that's live, giving you instant real-time quotes. And you can have their platform and not bother about their platform, because when you see the real-time quotes, the chart itself won't probably update for the 15 minutes, but you'll know what the prices are. You know what I'm saying? I'm saying
Warden, WRDEN.
Yeah, and I think it's called freestockcharts.com. I have it somewhere here as a backup. I haven't got it right in front of me, but I believe it's freestocks.com.
Freestocks.com. All right,
Yeah.
Basil, thank you, because everything changed as of the 20th.
Yeah, no, I can understand. 15 minutes. Let me show you a chart right here. This is the 1 minute chart of the volatility index. If you were 15 minutes behind, you wouldn't have been able to get this. This is 1 minute. You would have been right down here. Your VIX would have been at 10.26 at $9.58. 15 minutes later, it would have been at 10.05. I mean, you that's not what you want at all. That's if you're doing really quick trades, intraday trades.
I like the triples and the doubles, like the SSO and
you have to have.
And if I'm playing 200-300 shares at a time,
Bobby, don't even think of using a 15-minute delay. In fact, I even have right here 15 seconds. I can go to 15 seconds. And I sometimes use that if I'm in a trade, and like before the show, there was a fantastic trade and I was going to take it. I was going to use the 15-second, and then I thought, you know what? I just step aside. I missed a really nice trade, but big deal. There's always another trade. Tom O'Brien always says there's always another trade, and there absolutely is another trade. So
I know. I've been trading for 15 years by myself. Well, I've been really trading for 40 years, but anyhow, it's crazy, these new rules for
FINRA, right.
Yeah.
So Steve Rhodes is saying to me, Basil, the delay is only on the chart, not on the trade. Trades are real time. Just have him open up a non-trust account and use that for trading. Okay, that's a nice suggestion. Steve Rhodes said you can make it a real small one and just have it as so you can get it for the charting. But I don't. As I was going to say, the trade must be in real time. But the chart will be delayed. Well, that's like flying with a blindfold on, because I wouldn't recommend that. Not 15
going down
minutes.
the interstate with blinders on.
No, you can't.
Right.
Not for your doubles and triples. So don't change your trading style. Change your charting platform. That's all.
Oh, absolutely. I know. I gotta get it out of that trust and do some hanky panky.
Yeah. You want it real, and you want to be able to do it. I mean, right now, look at the 1 minute chart. Just gave a nice buy signal. Started brand new move A, B, new leg C. There's no time. Not if you're playing the doubles and triples. So I definitely make sure that I'm looking at a platform that's in real time, so that you can trade in real time. But good point, and thanks for bringing it up, and thanks for clearing it up, at least for yourself, because you don't want to be messing around with that.
I can't believe they say it's a professional account and then they delay it.
I don't. These rules that come up, some of them are archaic. I just don't even. When you've got program trading that can go can do 1 million or 2 trades in seconds, they say. I mean, I don't know what they're talking about. Nanoseconds. So, okay, thanks for calling, and tell me how you resolve it, okay?
Okay, Basil, thanks. Have a good day.
And you too. Good luck with that. So, Greg in San Mateo, California. Greg.
Good morning.
Hi.
Good. Hey, I have 2 questions I'd like to ask you, and then my cell coverage is not great here, so I don't want to drop your call, and then I'll hang up and just listen.
Okay, question is?
So the first question is Roman candle.
Yep.
And it occurred to me the other day, it should work as an inverted Roman candle as well.
Yes, it does work as an inverted Roman candle. It's an interesting phenomenon because major lows don't often have that inverted Roman candle. They do sometimes have the green, the same thing as a Roman candle, except it's green. Instead of opening at the high and closing halfway off the low with a very long candle, halfway candle, it's the opposite way around. But what I do look at is the resulting trades above or below the wick of the Roman candle. But that also brings me to a question I had from Adam, who says, the comp index, and if you want to hold on, and I'm going to give you a nice example of what we're looking at.
You bet.
Okay, so I'm looking at, you'll see it on the charts. I'm looking at the comp index. We'll be right back. That was up 30, S&P's up 7. Basil Chapman on with Greg. We'll be right back.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Technomental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, folks. We're back. Dow's only up 12 now at 15,956. S&P's up 5. So, in comp index is up 27. So, we're on with Greg. Greg, I don't know if you can see my chart right now, but this is the monthly chart of the composite, the NASDAQ composite. This is the the very large composite index, unlike the index 100, which has the top weighting in the Nasdaq. What we're looking at here is there's a candle that I call the Chapman Wave Roman candle. Now, I had a question from, let me just get to it because it was very nicely worded. So let me try to get it exactly as Adam worded. It says comp index. Please compare this very big down red monthly candle to near the 52-week closing lows to January 2008 and January 2001 monthly candles. Is composite index at same stage, early stage, of downtrend like back then with at least 13 months more a downside in 2008 as in 2008 or 18 months more downside like in 2001 before the summer 2002 bottom? So that's a great question. This is what I'm actually fighting with all the time with myself, because my mind is saying, and I got a whole bunch of, yesterday I showed the charts in Boston. I showed the pictures in Boston of the flipping of condos at $500,000 profit down on the, they haven't even finished being, they aren't even completed. So I'm putting that all aside. I'm saying to you, there's a candle that I call, it's really called the Chapman Wave Roman candle. The reason why I call it Chapman Wave is because I don't ever recall Nissan talking about this kind of candle. It's something I discovered a long time ago. And a Roman candle, as you know, if you light it, it goes whoosh. It has a fantastic kind of a blowing up. And this is what happens with the Roman candle. So now I'm going to just move over to, if I can find it, 2007. And right here at the top in 2007, there's the same Chapman Wave Roman candle. And this Roman candle, within 2 months, there's a monthly candle, the composite index made its high in October 2861.51, came down, and then what happened is we got a Roman candle right here in January of 2008. Once, my rule of thumb with these Roman candles is once you start to trade for a little while, in this case a monthly chart, for about a good part of a week, into the bottom of that, into the middle of the wick of that candle, you're liable to test and probably break the low. That's exactly what you did in March, because February was the testing. March, it went down to 21.55, then had a really good rally, and that confirmed very much two things. One is the Roman candle coming off a top, how a Roman candle can be a fantastic tool, and then the H pattern, especially with this doji wick of the low of March, it got broken decisively in September, and you went down. And then there was another Roman candle. So now let's go back to where we are, and I'm going to try to answer. I'm going to give a little bit more detail. Here's another one. This is the kind of thinking I'm at the stage right now of thinking more along the terms of the same candle that we saw in August of 2011, which traded the very next month, September, into the body of the candle. And then in October of 2011, it made the low. That's the closest comparison I can give right now to some kind of a bullish scenario where we are at this particular time right now. Okay, so now let me answer the question that about the Roman candle itself. The rule of thumb for me, as I say, is if it starts to trade into the wick, it should very quickly go down and test and probably break the low, and that would be the low of August of 42.92. The big rally we had, that rally was unusual, but it has formed an H pattern, but it's an H pattern within the shape of a rectangle. To me, that is really important because we haven't broken the upside boundary of the high of 52.31 back in July, and we haven't taken out the low of August of 42.92. So something's different about this candle. And to answer Adam's question is, are we in the same, is it the same category of decline that we would see from the 2000 top or the 2008 top? Is this the same sort of thing? But and that also equates with my 7-year cycle that I always talk about. So for me, this is really tough. On the one hand, I'm looking at the technical saying, wow, the MACD is not good. The stochastic, although the slow-moving average has actually flattened out quite nicely. So this is kind of difficult. So your question is, would I discuss the Roman candle, right?
An inverted one, if it works.
And now let me talk. And I'm just going to skim this because I can't remember if it was in this index. In my mind I can see. Yeah, there it is. It's not quite perfect, but there was a kind of a Roman candle, inverted Roman candle in September of 2004. I would have preferred if the wick was much longer, but it's the same theory that if the wick, you trade into the top of the, halfway into the top of the wick and then take it out, that becomes very important because that means you can go to the next level of resistance. So I'll tell you what I'm going to do. For Technical Friday tomorrow, I'm going to make a note here, Roman candle, RC, inverted example. I'll see if I can find one in my mind. Great. It's as clear as anything, but I have to, of course, go through hundreds of charts to see if I can find it. And I'll talk about it in a special way. But I also want to just mention that a Roman candle like the one, it isn't such a very big one, but it's a Roman candle that was made in July of 2006 in the monthly chart of the comp index. That is exactly what I'd be looking at as a positive, because when it happens off a low and then within 2 bars you take out decisively the top of the candle, that becomes a positive. Does it say it's going to go back to the high? It doesn't. It just says that is a positive. So let me find the example and then I can talk to you about it and I can give you some more information. But it's a great call and I will follow up tomorrow. Thanks so much for calling. I appreciate that.
I had one other question, if I may.
Yes, sure.
And just quickly, so I was looking at the XLE and the price of oil, and of course the price of crude oil recently went down to 2003 lows, but the oil just in general, the XLE is not even close to 2003 lows, and I know that there's other factors involved.
Greg, you've just brought up, can I just interrupt you for 1 second because I'm liable to forget. You've just brought up something really good. The candle that's forming, and it might form by tomorrow's close in the monthly chart of the XLE, is exactly the Roman candle at potential lows or at way off the high. This is the candle that we can talk about. So if you can see my chart right now, I'm going to talk about that tomorrow. What would be positive about this Chapman wave Roman candle if tomorrow it closes anywhere around where it is, or a little bit anywhere where it is? And that'll be an example. It won't be the inverted one, but it'll be the one I was talking to you about when you've already had a substantial decline. What happens then? Wow, that's great. Now I better make a note of that because I'm going to forget. So I'm going to put XLE monthly candle, Roman candle, ? Great. So tomorrow I'll be doing that, okay?
Thank you.
Good questions. And then if Dave in Westminster, Massachusetts can hold on a response to Bobby's query, great. I'd like to do that. We'll have this. I'll be back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Hi, folks. We're back. Dow's down 20 S&P's, and we're going to go to David in Westminster, Mass. Hi, David. How are you?
Yeah, good morning, Basil. Hey, I'm calling to comment on 2 callers back who was having problems because his quotes were delayed 15 minutes.
Yes.
That's a government rule. That's not Scottrade's rule. And
Yes, that's right. It's a FINRA rule. That's what he said, right.
Because he has a trust account. And then also because he's considered a professional trader in a trust account. What he needs to do is just set up a standard account with a pay-on-death policy to his daughter. And then he can use, with a $2,500 deposit in a standard account, he can get free streaming quotes on the Scottrade streaming quotes. Or if he wants to use the elite trading system, he has to have 25 grand or more. So
okay, well, I'm pretty sure that Bobby's probably listening right now. I'm sure he's taking all this into very valuable information. Now, you mentioned to keep it in the same. So with Scottrade, I personally have a whole mix of different services. For instance, futures I trade completely as completely separate, and I love them because in the times that I've watched different platforms slow down, even that big 1,000-point crash back in May of 2011 or whatever it was, they were within split seconds. They were moving. It was great. So I like that.
I love Scottrade and I love their system. And like I say, there's 2 types you can have. You can have their streaming Scottrade streaming quotes, which is all instantaneous, and you only to open an account you got to have $2,500 and just have a pay-on-death policy. Or if you have put $25K or more in a standard account, then you can go to their elite system and be a day trader.
Because
you can be a day trader on the other one too, but you're just limited to 3 trades a day, I think.
That's right. So
ins and outs, and out. But if you sell, you can buy back. It doesn't count. But if you buy and then sell, that's within the 3-trade rule.
And that 3-trade rule can be a real killer, especially if he's using, in this market right now, the triples and the doubles. Fabulous. That is fabulous information. The other thing I want to...
25K or more, you're not subject to that 3-trade rule.
That's right. Now, the other thing I wanted to mention is I actually prefer to be using the platform that I'm using for my analysis also as the platform that I do my quick trading on. It isn't the case, but that's what I actually would prefer. But I'm finding now that I have to have that one extra step of thinking. For instance, when I play tennis and I suddenly find I'm now down a little bit, and for no other reason, but if I suddenly stop and think and I say, whoa, you're a little tense there, I count one. As soon as the person serves, I say one. That one essentially establishes for me, it's like having a drink of water. It resettles everything and my mind is totally focused. It's just an amazing thing. I don't know why I didn't think of it I did think of it years ago, but years and years ago, it would have been great. And I find that myself in the platforms that it's like saying one, having to take my eye off the one thing to look at where I'm about to hit the buy or sell. I find it actually is, in a way, for me, a little bit useful. But I think very often it's just nice to have the one platform, and that's what you use. You don't have to jump from platform to platform. In other words, you don't have to go from one company to another, and one brokerage to another brokerage. But I love the advice that you gave, and I'm sure that if Bobby wants to let me know if that's something he's going to do, that's great, and then we will know if he's settled in and got a platform that he's not only comfortable with, but serves all his needs. And that's really important.
I love the streaming quotes, and it has a pull-down window for your quick trades, and they're just instantaneous. So
right, and then the other platform that I do like is when you can draw a line, and then another line, an entry line, and a stop line below it. I like to use lines like that because then it's trouble-free. You just see visually. It's going straight to the line, bam, you're out, bam, you're in, whatever it is. So, yeah, those are all very great conveniences. David, just remind me again, I was going to do it before. Westminster is Western Mass?
Westminster, it's in just northwest of the Denver city. It's just a suburb of Denver.
Oh, because he said Massachusetts. You're in Denver.
No, I'm in Westminster, Colorado.
Oh, Colorado, because there is a Westminster here in Massachusetts, and it's in MA. So you're in Colorado. Okay, very
I
good.
listen to you guys every day. I love your show. I love all the people on, and I love TFNN. So,
that's wonderful.
I like stock trade too. So there you go. I'll talk to you later. Have a great one.
Thank you so much. I appreciate it. That was David in Westminster, Colorado. Okay, so I'm pleased I asked that question. So now the Dow's down 46. S&P is down to 2.9. I'm going to just two quick things now. One is the IYT, terrible action in the transports, and this is another reason why I don't want to be sitting here, and I've said this quite clearly. I'm looking at the downside, even in the short term. We're looking for these rallies as a short-term trade. We're getting more of a bias in my portfolio. We're out of long positions. We're getting more of a bias towards the negative side. I'm seeing so many opportunities to the downside, and I'm going to deal with the downside. So I'm trying to set it in the back of my mind. That's why it'll be good for me to do the Roman candle show tomorrow, Chapman Wave Roman candle, because I don't want to be influenced in my trading at this particular point, even the position plays, by thinking there will be another move that takes us to at least close to all-time highs. I'm actually now getting a different picture altogether of what it's going to take. And it's starting to fit in really nicely with the whole political, economic, just the whole scenario, the technical scenario. But I don't want to let it cloud my thinking at the moment. At the moment, these candles, look at the Roman candle of August in the IYT, the transportation iShares, just took it out completely this month. It's down from a high of 167 to 119, 50 points. The 50-point decline in the transportation index is telling us about economic recession. It's telling us about a lot of things. And if you look at the XAL, and I don't want to forget that I've got another, yesterday I thought I had another section to go. And there I am talking away, but everybody said, hey, you're done. So I tried not to do that today. Look, the XAL, the ARCA Airline Index, 108.16 was the peak G. I have to call that a G now. There's no G/C, it's a G. I've already got the down inverted caret. In fact, that's not an inverted carrier. That has to be a down arrow. So that's in a sell mode. The monthly is in a sell mode. I don't want to get overly bullish at all. Looking at the chart of, I just don't see yet what's going to happen in the transportation index, the airline index in particular. It should be doing fantastic. Anyone out there take a flight that isn't just chock-a-block full? Sometimes you can't even put your luggage, your carry-on luggage. You have to put it down in the hold because they're so full up. Something's going on. They should have been creaming. I mean, they've got you with the seats. They've got you with the baggage. They've got you adding on. Each breath is like $1 in and $1 out. I mean, what is this? So this is not good action. And I don't like the fact that we're down 39 right now. And I'm going to look at Facebook. That was another question. I'll do that as we're going out to the break. I'll put it up. Very big move up 12 at 107.38. Hasn't taken out the highs. I'll be back.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Learn how to trade options with swim lessons. Brought to you by TD Ameritrade. Think or swim. Next on TFNN.
Folks, we're back. Let me just finish this. All right, a couple of things now. I have to go and look and see where I was. I was talking about the XL. Oh, Facebook. So I had an email saying, so much for technical analysis. Look at Facebook. So there's nothing I can disagree with. Technical analysis said, you remember yesterday I was looking at Facebook and I said, I don't like, this is C, I don't like the action of Facebook. I can't remember now if I even remember that it was the earnings coming out. But Facebook, we know, is one of the leaders in the whole section. Everything you read about says that Facebook has been doing everything right. So but the chart pattern said there was an H formation forming, and that 94 was the very important 200-period exponential moving average that it broke down under, popped above, and then was testing yesterday. So the candle yesterday was very negative, but comes out earnings, and look at them, up 13.29. The all-time high was 110.65 in November on the 5th. So can I argue with that? Look, peak F top in the weekly chart, everything about it. So every once in a while, you get a chart that says, not good, and then earnings come out and boom, something changes. But that doesn't really change the fact that Facebook has to break and close above 110.65 by next week on a weekly basis, and that could recycle, and that could turn it into a peak C, a leg C in the monthly rather than the alternate count F, and that would extend leg F in the monthly chart. So absolutely, this is technically, everything was looking lousy. There was a nice turn up in the stochastic and the MACD, but the weekly chart wasn't good, and you get earnings. You can't help that. That's what happens. You know, it's like, there's nothing I can do. Yesterday, at this particular time, when I looked at it, it wasn't looking good. And today, after the news last night, it looked great on a short-term basis. But this gap is going to be filled at some point. But Facebook is one of the companies that's doing really well. The monthly chart, I think I said, was still looking very good, but the daily was not, and the weekly had turned down as well. So I just wanted to clarify that. Now, don't forget, special guest hosting today's swim lessons, Sarah Linnane, joins Scott Connor and Kevin Hinks. There's a great show. Try your best to listen to it straight after mine, just all the way through, all the way to Andy Hecht at 5 o'clock till 6. So great program. Now, let me just go through this. VIX.X. I had a question. Where would the VIX need to be to show that the selling pressure is going to continue right into the close? The VIX is at 23.19. 23.80 is the 9-period moving average. I would suggest to you that if the market actually goes down now to minus 70 to minus 90 after doing everything it's done yesterday and today, there's a real good chance that the VIX index will go above 20, will get into the 24s by the close. And that would suggest that the selling pressure has not diminished. Now, if there is, now I don't know if there can be a really good upside move of 60 points in the Dow, but if there is some kind of a turnaround later, it just could be a steady move to the upside to close like plus 30 in the Dow, plus 5 in the S&P. And that'll only happen if the VIX index starts to hold below 23, it's at 23.20 right now, below 23 for about an hour. It needs to do that. It needs to confirm that it's not going higher, and that'll indicate that there's buying pressure rather than selling pressure. Just wanted to clarify that. Now, here's the other thing. Bank of America is just not good. Look, the monthly chart had the Chapman wave. This is called the Chapman wave stalk leg formation, and it's broken down in the monthly. This is not a good sign for the market to have Bank of America. This is the one bank that's really done everything they're supposed to per the rules that we know of, at least at this point. And the XLF is not looking very good at all. So and look at the monthly candle. So tomorrow is going to be a really important close at 4 o'clock for monthly charts, weekly and monthly charts. So I'll be back with Tom later today. Have a great session, and I will be back for some of you tomorrow, but I will be back for an interview with Tom later today. Thanks for being here.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This is TFNN.